Hi guys, good morning. Hi, good morning. How are you? My name is Oluwatosin Olasende. I'm a chartered accountant with 9 years of experience across accounting, taxation, financial management, and audit. So basically, I also co-own a small medium enterprise in the manufacturing sector. Basically, this morning I'm bringing you personal investment opportunities for business owners. So congratulations, you started your business. The question now is, how do you then save? How do you manage your own personal investment that is separate from your company? Hi, is anyone there? Do you want to say hi to me? Have you logged in? Let's see those that have logged in. Feel free to come into the comment section and give us your feedback. So yes, here we are. You need to have your own personal investment that is separated from your company, because at the end of the day, your company is a different entity from yourself. I understand the urge and the excitement of owning a company and always wanting to pump all our funds into that company to ensure that it gives us the return that we're looking at. But at the same time, you also need to know that you as an individual that is separated from that company, you also need to look out for yourself. If anything happens, if push comes to shove, if should the event that the company fails, there goes your entire investment. So it's like a bit of a pull pause, like a backup plan, something that is separated from your company that is also for you. And also, should the case that there is a loan or there is a liability, the creditors, that is the people that has borrowed to your company, your suppliers, your creditors, the taxman, they will go after your company and take all the resources there. You will not have that access to it. So it is very important. Can you hear me now? Hello, can you hear me? So it is very important that you have an asset that is separated from your company. You need to separate that from the get-go. So now that we've evaluated if we're separating it or not, what do we do? Hi Chinazo, hi Florence. I can see you there. Is my volume better? Am I being heard now? Okay, great. So now, fantastic. So now that we've evaluated what we need to do, how we need to separate our identity and our personal investment from our company, we can go into the options of what do we need to do. Great. So now we have several options of how we can invest in our personal capability that's separated from that of our company. The very first one is your savings. Great. So now, savings. Savings basically means you're just putting your money in the bank. You can walk away. It's not committed. If anything happens tomorrow, you can run there, you can go get your cash. It is not committed. So we are looking at anywhere from 3.5%, 4% to the lower, to the higher unit numbers. But there are certain banks that gives you some of the best rates on your savings. So we have Alat by Wema Bank. Alat gives you a steady 10%. Come shine, come sun. You don't need to peg it. You don't need to tie it as a fixed deposit. Standard Chartered, also gives you 10% on your savings account. You don't need to tie it to anything. It does not need to be a fixed commitment. So now these are some of the banks that gives you return. So for instance, if you put 100,000 in your Alat, or if you put your 100,000 in your Standard Chartered, you are guaranteed that your savings will give you 10,000 as at the end of the year. So now that has been evaluated. Will I go for that option? I work so hard for my money that I would not go for the least option. I always want to ensure that I maximize my inputs, that I always get the most from my money. So no, that would not be my option. So what are my other options? I have the fixed deposit. So fixed deposit, you're telling the bank that for the duration of time, I will not touch this money, but I want to invest it. And it ranges from different organizations. So for instance, Stanbic offers you 12% on a fixed deposit. So if you fix your amount for an entire year, you get 12%, and there is no minimum. So for the savings, there is no minimum. For this fixed deposit by Stanbic as well, there is no minimum. Do you know Rain Money? Rain Money is it's a microfinance company. They charge almost as high as 48% to give you a loan per annum. But guess what? The beautiful part of this is if you also fix your deposits with your rent money, guess how much? 24%. That is a whole lot of money. However, you need to bring in a minimum of 2 million naira. So yes, the stakes are high. Would you want to put that 2 million naira in your in a fixed deposit, would you rather invest that in your business? I guess these are some of the decisions that you have to make. But the beauty is that you are aware of your decisions. Great. So now that we've sorted that out, we have, the fixed deposit varies from bank to bank, but at least you know what your benchmark is like. Stanbic IBTC gives you 12%. You need to also negotiate with other banks and see what are my options, how much am I getting. But rent money, 24%, but a minimum of 2 million naira. Great. What are my other options? We also have mutual fund. I hear this a lot. What is mutual fund? And to be very honest, before I really got into this whole personal investment thing, I was also a bit confused. So basically, what mutual fund does for you is this, right? They get you an expert fund manager. He takes a decision on your behalf and he spreads your assets. So we have it in equities. We have the money in T-bills. We have the money in different kind of assets. But I know that they are, because the equities are more volatile, they are restricted to a certain percentage of your fund that could be put in equities, but it tries to put your money in different areas to maximize your entire fund. So the percentages of your mutual fund ranges between 17 to 18%. Now that is pretty high, and I will go for it. Do you know why? Because your inflation is 15.9%. Whenever you're thinking of investment or you're thinking of savings, you should always give yourself, my benchmark is my inflation rate. Your inflation is currently 15.9%, so you ask yourself, what I want a minimum of 15.9%, that is my inflation rate. So now you're probably asking, why should my inflation rate be my benchmark? Let me tell you why. The purpose of your inflation rate is telling you that this is the value, this is the purchasing power of your money. So if your money will lose its purchasing power, you need to be able to keep saving or keep investing and getting a return that is equal to the amount of purchasing power that it might lose. So let me bring that to layman terms. For instance, last year, or about 2 years ago, I was buying, let me look for a fantastic example that everybody uses. Let's say, for instance, agege bread. Agege bread was 50 naira, it was fluffy and it was a certain size. But now, that same agege bread I was going for 50 naira at that same fluffy size is now 70 naira. That is what inflation does. So inflation, I invest my money, I ensure that today or in the future, I will still be able to buy that my same agege bread at the new price. So let's say the price has gone down from 50 naira to 70 naira. I've invested enough to be able to help me make up for that difference. So the inflation rate is an average. For some, it could be higher. For some products, it could jump up by 100%. For some products, it could jump up by like 3 or 4%. But the National Bureau of Statistics tells us that this is your average. So hence we use our inflation as the benchmark. So now we know mutual fund. They put your money in different assets and they help you manage it. So it's like a fund manager for everybody that cannot afford to get a fund manager themselves. So that's what mutual fund does. This is actually my own personal favorite. I love it. So now we also have T-bills. What does T-bills mean? T-bills means treasury bills. So basically, your treasury bills is also a form of investment. And the beauty about treasury bills is that it gives you your interest upfront. So for instance, and the treasury bills interest rate also changes. We have your short term and we have your longer term. So we have 3 months, we have 6 months, we have 1 year. The longer your term is, the more attractive the interest rate is. The shorter your term is, the lower it is. That is compared to what the higher one is. So let's say you give them 100,000 at once, and let's say the interest rate is 15%. You get your 15,000 naira upfront. Then you get your asset at your investment at the end of the duration or the end of the tenure of your investment. So those are T-bills. T-bills are safe in the sense that if anything happens, your money is guaranteed. Unlike of your Stanbic, unlike of your mutual fund, it is prone. Your capital might actually be reduced. That is, you might not regain your entire capital, you understand. But for your T-bills, your fixed deposit, your savings, your capital is 100% guaranteed. And that's why when you're going for mutual fund, you go for a company that is trusted, that is tried and trusted. They've done it several times in the past, and they can say that, you know what, this is our graph, this is our timeline, we can vouch for it. So now that we've looked at mutual fund, you're probably thinking, what are my other options? It is endless. You can also go into the equities market. But for equities, you must remember that you are there for the long haul. I personally, if you're not a trader, I would not offer or advise you to try shares. Trade shares is a long-term investment. So I think it was in 2015 when we're having the whole recession and the market was plunging. Guess what? I bought UBA. Their stock for about 4 naira, yes, and I knew I was a bit scared because the the market was dipping. But I told myself, although this is for a long run, it's something I want to give to my kids. You understand? And then what? We're currently in 2017, and that same stock that was 4 naira is like 9 naira 80 kobo. So it has more than doubled. So in how many places would actually give you 100% return on investment in the space of 2 years? So the secret is, number one, I've given you all your options. You have savings, you have fixed deposits, you have mutual fund, you have equities, you also have real estate. That is also an investment. And also, because of the way the Nigerian market is, you have lands, you have houses, you have these other things in different places. With your research, you can look at which property or which little land can I invest in and give me the higher outcome. Sometimes in the places that are like on the outskirts, they could be going for 500,000 naira per plot, and in the space of 1 year, depending on how it is positioned and location is key, that 500,000 could become 1 million. So I think the most beautiful part of this is that let us also always know that we have an option, and it is up to us on how we evaluate that option. Another thing I want to touch on now is also certain assets. There's a certain app, I don't want to call name, that is like a savings app and gives people savings. I remember my friend coming to me, oh my gosh, Tosin, it's 25% return. And then we checked. Guess what? The 25% was actually for 2.5 years, which means that you get only 9.1% for 12 months. You understand? So the way they had couched the message made it seem like they could have gotten 25% in a year, but it's actually for 2.5 years. So you need to be out there, look out for yourself, or check with your friends in the financial sector and say, can you just please help me look this thing over, so that you're not just getting excited about information that might not necessarily be comparable. So they did not lie. They were going to give 25%. However, it was for a duration of 2.5 years. If you're not versed with finance, you would have not known that it's actually lower. So that 9.1% is lower than your savings that you could have gotten from Wema Bank, is lower than your savings that you could have gotten from Standard Chartered. It's lower than Treasury bills, and you understand. So let us know your options. Now that we've evaluated all these options, it's enough to talk. Oh my goodness, how often do we talk? Talk. You need to do. So go back to your drawing board and say to yourself, I, as a person, I need to be separated from my company as an entity, and I need to look out for myself. I pray your company succeed, and I pray it thrives, but the reality is anything could happen, and if anything happens, a priority is given to your creditors. They will come first for those funds. So you need to also have assets that is in your name as an individual and not just your company. So yes, I hope you guys have a fruitful year ahead, and I hope we just keep making money and we keep looking out for ourselves. Let our money work for us. We go to work, we go to our businesses, we work the entire night, we put in all this effort. So don't let your money just sit in the bank without it making money for you. Tie it to something, invest it. Let your money work for you. And that is it from me today. It's Oluwatosin Olasinde, and I'm here representing or bringing you this on behalf of Redalia Workspaces. Thank you. If you have any questions, feel free to come in the comment section. Feel free to shoot me a mail, oluwatosin.olasinde@yahoo.com, or you can just go on the platform and I will be there to respond to you. Have a lovely day and do take care. Bye.